Hello, everyone. Thanks for joining us this Wednesday, and welcome to this specialist trading educational presentation. Now, today I want to talk to you about the very first strategy I ever learned. This is something that was taught to me some 45 years ago on the floor of the Pacific Stock Exchange. And the funny thing, the most interesting thing about this is that I continue to apply this, and you'll see it today. Now, for example, let's take a look at what my mentors first taught me when I started trading on the floor. This is something that stuck with me, and this is something I teach to my students around the world. And that is this: the market, not some guy in a webinar or not some guy on TV, but the market is always giving you a clue as to which direction it wants to go. Now, this goes counter to everything we've ever been taught before. We're always taught that, well, we're supposed to find out what the market is doing by some guy on TV or some master indicator or by some interest rate announcement. But really, the market, the very chart you're looking at, whatever you're trading, whatever time frame, that's telling you and giving you clues all the time as to which direction it wants to go. The funny thing is that we're never taught how to look at it this way. We're always taught to look at something else. For example, someone looking at this chart here in VRTX would say, well, I've always been taught, lower lows, lower highs means that we're in a downtrend. So obviously we're going lower, we're in a downtrend. I don't want to buy this, or maybe I'll wait to see if there's an uptrend in place. But with what I'm going to be sharing with you today, you would have known that we weren't in a downtrend, I should say, at all. We were actually in an overall uptrend. And with the second edge I'll be teaching you of this strategy that I've been using for over 45 years, you would have known that a buy signal was generated right here. So this is what we mean by being out of sync with the market. Most traders are out of sync because they're listening or taking their cue from something else. But everything you're seeing here, the uptrend and the buy signal, was given by the market itself, what you're looking at. And then potentially, if you had taken that buy signal, you could have potentially captured upwards of 48 points in the next month or so. Now, here's the good news. Even though we teach you all of these different things and all the different ways to listen to the market, everything is one click away on our platform, the PTS Primo Charting Platform that I developed at Pro Trader Strategies, that teaches you how to trade and makes trading simple. So welcome once again to this educational presentation. My name is Stephen Primo. I'm the president and founder of Specialist Trading. As I said, I've been involved with the markets in some way or another, in some capacity, for the past 45 years. I first started trading on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years, I was a specialist. A specialist is someone who made markets or who specialized in making markets. And I did that for 9 years. As I said, I made markets and traded through the crash of '87 and the bull market that followed. So I've traded through straight up markets, straight down markets, sideways markets. In addition to that, any strategy, any system, any technique, any indicator you can think of, I've traded it. Most likely it's been around already before. It's just been renamed or rebranded. So in my 4 decades plus of trading, I know what works in terms of consistency and I know what doesn't. So that's why I teamed up with Pro Trader Strategies over a decade ago to simply educate and to teach traders the things that work, the things that have high levels of consistency, so that you can ultimately make your own trading decisions. And that's our goal at Specialist Trading. Remember, first and foremost, we are an educational company. And you'll see that in today's educational class. Now, once again, before we begin, as always, we are required by law to share this with you. So please take a moment to view our disclaimer. I'm going to share with you a lot of performance results in today's presentation, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples are strictly for educational purposes only. Now, a lot of people new to our webinars are saying, well, how can I get more education or see more of you? How many more webinars do you do? Well, another great way to get our information is simply to follow us on Twitter. There's our handle right there. Every day I post about 4 or 5 different posting or displays of signals that our strategies have generated and little bits of explanation as to why they work. I also post bits of financial wisdom. So lots of great free education on a daily basis. I suggest copying down their handles. So there's lots of great free information. So please feel free to follow us on Twitter. Now, if you've come here today thinking that I'm going to tell you what I think the market's going to do, or what I think the best stock is to buy, or what the best stock is to sell, or what I think the perfect time frame is, once again, you've come to the wrong place. That is totally counter to what we teach and what our philosophy of education is. Remember, we are first and foremost an educational company. And an educator, a good mentor, does not make those decisions for you. He teaches you how to trade. So that's what my goal really is, not to tell you what to buy or sell, because think of it, the entire industry is based on that. You buy some type of a system, which you have no idea what it's based off of. It just spits out buy and sell signals, and you just blindly take them, right? Or you have a signal service where you just take the signals on a nightly basis, or you go to a chat room and listen to what they like to buy or what to sell, or they tell you when to get in, when to get out, okay? Everything is designed for you to basically give your power away and base it off of what someone or something else is doing. And that's why 90% of all traders fail. It's because you're really not making your own trading decisions. I mean, think of any other endeavor. Think of an athlete. Think of a lawyer. Think of a brain surgeon. What if they were asking, what if in the middle of an operation, a brain surgeon asked the nurse, what do you think I should do here? You think I should operate it this way? Or what do you think? Should I do it this way? Or what about a lawyer? What if he asked his client, what do you think I should do? What did you think I should say? But the funny thing is, traders do that every day. You go to a chat room or a trade room and you say, what do you think I should buy? What are you doing? What do you like? All right. This is no different from being at the horse races and saying, who do you like in the fifth? It's really a gambling mentality. And that's why, once again, most traders fail. You take yourself out of the game. The way to get back in the game is to make your own trading decisions. You have to rely and have trust and confidence in what you're doing is going to work. Now, that's where we come in. We provide all of our students around the world in over 115 countries and in every state of the United States, information and education that has stood the test of time, things that are very consistent so that ultimately you can make your own trading decisions. There are enough profits for everyone to go around. That's why we want to teach you to become a consistent trader, okay? My goal is not to force feed you signals, not to tell you what the market's going to do. My goal is simply to teach you how to trade with the specialist edge. Same edge that was taught to me some 4 decades ago. Hopefully, it will be able to sustain you for that amount of time, okay? Now, this is going to be an educational class once again, so ask me as many questions as you like, but please wait till the end of the class to ask questions. It won't be very long, about a half hour, 40 minutes, and then we can go into questions and answers then. Also, we are recording this, so if you have to leave early or if you're having technical issues, many times if you aren't able to see or hear the screen clearly, you can just log off and log back on again. It's your own internet connection. But if something isn't coming out clearly, or once again, if you have to leave, don't worry. Each and every one of you will be sent a link to this recording. And then lastly, this is a Zoom presentation. It's just a static PowerPoint presentation. We're not going to interact with one another by sharing our cameras or microphones. So please remember to disable all cameras and microphones, okay? And then we'll be able to ask questions via the chat box at the end of the presentation. Okay, with that stated, let us begin today's educational presentation. And let's get right into it, okay? I'm going to share with you 2 of the edges of this particular strategy that my mentors taught me, all right? So let's get right into it. And you're going to see how simple this is, because remember, trading is really simple. It's the trader that makes it more complicated than it has to be. It's the easiest thing in the world to overcomplicate your trading, but it's the most difficult thing in the world to simplify it, because you have to release all these things, these so-called indicators, these so-called conventional wisdom, that things that have worked and stood the test of time, but they really haven't. They're really like urban myths. So you have to let go of those things and learn to just rely on a few consistent techniques and methods. And that's when your trading will really flourish, okay? So let's start with rule number 1. And that is, if price is above the 50-period simple moving average, the overall trend is up. It's that simple. And conversely, if price is below the 50-period simple moving average, the overall trend is down. Now, why is this so important? Well, it's our philosophy that we will never be out of sync with the overall trend. So in other words, if you get a buy signal and it's below the 50-period moving average, the odds are against you that that will work out over time. Sure, you may get a great signal every once in a while and say, hey, that guy Steve Primo doesn't know what he's talking about. But if you continue to do that over time, most likely you'll give it all back. Very similar to the slot machines in Las Vegas, okay? Everyone loves the slot machines because they're so simple to use, they're so easy, and they are designed specifically to give you a winner every once in a while, to have the bells go off and the whistle and see the money come down the tray. So it gives you this false sense of security that you're doing well. But if you stay there over time, they're designed mostly for you to lose everything. And it's the same way with buying below the 50 and selling above the 50. Remember, trading is a numbers game. It's not that every trade is going to be consistently wonderful and every trade is going to be a winner. If any teacher promises you that, you should run, because that's not the way trading is. That's not the way life is. It's not going to be a sunny day every day, okay? Not every athlete's going to make the basket. Not everyone's going to be a winner every time. It's just the way life is, and it's the same way with trading. So let me show you this generic chart here. This is why most traders have difficulty. They'd look at this and say, well, Steve, there's no real trend here. We're kind of going down, back up, and then back down again, right? So I should stay away from this. Well, not really, because you're not really listening to the market. The way we listen to the market is by applying the 50-period moving average, okay? And then we ask ourselves, where is price in relation to that? Well, price is above, obviously. So what is the market? Not some guy in a webinar. What is the market telling you? It's telling you that the overall trend is up. Remember, we will never be a seller if the overall trend is up. Now, conversely, let's look at this generic chart here. Once again, most traders are out of sync because they say, hey, Steve, there's no trend. I don't know what to do here. I'll wait till I get that signal in the chat room I go to, right? Taking yourself out of the game. But it's as simple as listening to the market. Apply the 50-period moving average, and you ask yourself, where is price? Price obviously is below. So not what some guy on TV is saying, but not what some guy in a webinar is saying, but what is the market saying? It's saying the overall trend is down. Remember, we're never going to buy if the overall trend is down. So right there, you've already defeated half the problems you're going to have because you're in sync with the overall trend. Remember, trading is simple. You don't have to make it more complicated than it already is. All right, so we know the overall trend. Now we want to also know the short-term trend because we want those two to be in sync. Now, most traders think that, well, yeah, I understand that, Steve. So the way to do that is to look at a higher time frame and a lower time frame. Remember, keep things simple. There's no reason to look at two different time frames. Let me share with you rule number 2. This is how you determine the short-term trend. When a bar closes in the top 25% of its range, once again, the market is saying, I want to go higher on the short term. Conversely, when a bar closes in the bottom 25% of its range, the market, not me, not some indicator, the market is saying, I want to go lower on the short term. It's that simple. Now, if you don't understand what that means, bottom, top 25%, let's look at this generic bar once again. This could be a 5-minute bar, it could be a monthly bar. It makes absolutely no difference. What you want to do is divide by 4 separate but equal parts, okay? Now, if you close, as we see right here, the close is right here, in that top 25%, what is the market telling you on the short term? Not me, what is the market telling you? It's saying, I want to go higher on the short term. So if you have this bar above the 50-period moving average, that means you have the overall trend and the short-term trend in sync. There's absolutely no reason to look at a higher time frame and then go to a lower time frame, or to look at 2 different charts on 2 different screens. Once again, why overcomplicate things? I mean, I know that style or technique has been around for ages. I heard that when I was trading 45 years ago on the floor. And guess what? I've never personally found any consistency looking at 2 different time frames. I've just, all it's done is kind of messed me up. I waited for the 2 to line up. And by the time the 2 line up, I've missed the trade, right? I'm sure you've all seen that before. So why not just look at one time frame, look where price is either above or below the 50, and then where the bars are closing in the top or bottom 25%. For example, here's that chart again. The overall trend is up, right? Because we're above the 50. And what do we have here? We have a bar that closes in the top 25%. And look, it goes up for the next 5 bars, okay? Now look what happens right after that. This is where most traders say, well, yeah, but Steve, look what happened. It went down, okay? I would have lost money. Remember, trading is a numbers game. Look what happened right after that. Another bar closed in the top 25%. And what if you had sold or went short? How well do you think you would have felt just off those 1 or 2 bars going lower? So you see how the market was telling you, even though it went down a couple of days, how it wants to go higher. Now, conversely, what if we see a bar close like this? Well, we divide by 4 separate but equal parts. And if we close it in the bottom 25%, what is the market saying? It's saying, I want to go lower on the short term. So now let's put this together with the overall trend. The overall trend is down because we're below the 50. We see this bar close in the bottom 25%. And look what happened, okay? Once again, trading is simple. Once you get out of the way, it's really simple. You just have to keep it, very simplified to maybe 3 to 5 rules, and that's it. There's no tons of magic indicators and no tons of magic rules that need to be applied, okay? Usually it's the trader themselves that make it more complicated than it has to be. Now, these two rules, these two techniques that I just shared with you make up the preliminary rules to the very first strategy I ever learned. This is a strategy that was taught to me by my mentors some 4 decades ago on the floor of the Pacific Stock Exchange, and that I continue to apply. This is strategy number 4. You've heard me talk about it before. This is one of our most consistent methods to date. Let me give you some of the highlights of this particular method. It's a pattern recognition strategy. So therefore, we're basing it strictly off of a pattern. All right, this is a pattern that happens over and over and over again once you learn how to identify it. And it happens in any market, in any time frame, and in any direction. All right, now it's designed for traders looking to catch momentum. So what we're looking to do is have a quick, nice pop. Now, when I first started trading this, when I was on the floor of the exchange, we would use it to get in and out maybe in 3 to 5 minutes because we were on the floor making split-second decisions. But we've developed ways to stay in the trade days, weeks, even months if you'd like. And this is all taught in the course. Now, the beauty of this strategy, once again, is that it's very simple. It only uses one indicator, and you already know what it is. That's the 50-period simple moving average. Now, there are roughly 5 rules to this method. I've already shared with you almost half of them. I've given you 2 already. But the remaining rules I can't divulge. It wouldn't be fair to the traders who've already purchased this strategy, the students around the world that are trading it. But you already know almost half of the rules to this, and we'll show you some examples in just a few minutes. But let's take a look at that stock we looked at earlier, VRTX. Now remember, we thought that we were in a downtrend, right? Nope, we were in an uptrend. How did we know? Well, what did we do? We applied the 50-period moving average, okay? Now, even though we opened below here on this bar, look where we closed. We closed above. So the overall trend is up. The market is telling us, even though we've been going lower, the overall trend is up. Now look at this very same bar. We closed in the top 25%, okay? The very top 25% of the range. Hold on a second here. What is that telling us? It's telling us that the overall trend and the short-term trend are in sync. So what we want to do is look for the remaining rules to generate a buy signal. And guess what? They did. So on that very same bar, a buy signal was generated based off the pattern we teach you in the course. And potentially you could have captured 48 points. Now we have upwards of 7 different exit techniques that you can take advantage of. One of them I'll be talking about later on in today's presentation. But remember, our whole goal is not to tell you what to buy, where to sell, where to exit. Our goal is to simply share with you these things so that you can ultimately make your own trading decision. Remember, as mentors, we want you to make your decision because we want you to be successful. This is not a system where everyone buys at the exact same place, everyone sells at the exact same place, everyone places a stop at the exact same place. It doesn't work that way here. It's more like what we call a buffet type of education. Think of a buffet restaurant, right? Everyone's gone to a buffet restaurant before. You walk in with a friend, let's say, or a significant other, and you want to get a nice meal. Now, when you walk in, you see your favorite entree, maybe it's a steak, okay? So you pick that up. You also see your favorite salad or your favorite appetizer. You get those on your tray, and you see your favorite dessert and your favorite drink, and that's your meal. Now, someone else right next to you could pick an entirely different entree, an entirely different appetizer or salad, an entirely different dessert, and an entirely different drink. And they're just as satisfied as you. You both had a very pleasant and enjoyable buffet dinner. That's the way trading should be, all right? You do not have to enter at the same place. You do not have to exit at the same place. You do not have to place your stop at the same place. You simply have to highlight this place of entry And you can pick where you want to enter, you can pick where you want to exit or place your stop and still have an enjoyable and successful trade. And even though someone may enter at the exact different place from you and exit much later or much earlier. So that's the way trading should be. Remember, once again, the reason why 90% of all traders fail is because you're taking yourself out of the game. You're going to a chat room, you're listening to the guys on TV, you're relying on some system you bought for $10,000 that you have no idea what it's based off, and just letting it spit out the orders for you, okay? Now, trust me, I'm not trying to be arrogant or condescending. I fell into the same trap when I first started trading. It's very simple because we're all taught that's the way to be successful. But if this works, why is it estimated that 90% of all traders fail? Obviously, that way is not successful. The only traders I know that are still trading are the ones that make their own trading decisions. They don't watch TV, they don't wait for the earnings, they don't look for economic announcements to be made. They don't even concern themselves with those things. They just have a simple plan that has stood the test of time, that works over time, and they just simply apply it on a daily basis. This is what we're trying to instill in you. Now remember, the advantages of trading this particular method is that it's extremely consistent. It makes you a part of the process. Remember, we don't want you to be out of the game. You have to be a part of the process. And it's designed to be as simple as possible. Remember, you already know 2 of the rules, okay? Nearly half of the rules. Now, let me talk or what it means to be extremely consistent, okay? Most traders think that first category means that, well, that means, Steve, there's a lot of winners, right? It's very consistent, so that means it wins almost all the time. No, that's not what consistent means. Consistency is a 2-step forward, back-step approach. To be consistent means that you have an awareness of losses, that you know that you will experience losses from time to time. That's okay. Remember, not every athlete hits a home run. Not every actor has a hit movie, okay? That's just not the way things work. But what you want in a consistent method is one that's able to recoup those losses very quickly. And that's what strategy 4 is. It's extremely consistent. So while it will have a loss here and there from time to time, it's able to recoup that loss, sometimes on the very next setup. And I'll show you some examples of that in just a few minutes. All right, so let's look at some recent examples, and let's start out with how everything you're going to be seeing today is one click away on the platform. Now remember, in our courses, we teach you exactly what to look for. We teach you exactly how to make your decisions on your own. But then we developed the PTS Primo Charting Platform to make that learning process simple so that you could check your work, so that ultimately you could see where a signal was generated, where one wasn't. You could check your work, and we ultimately want to get you on that path to just being able to identify a setup no matter what charting platform you're looking at. All right, I can look at a chart and know whether there's a strategy 4 signal or not just off the chart, and I want to get all of my students to that same level. All right, so let's look at some buy examples that happened within the last month or so. Here's an example in SIGA, SIGA, okay? Most traders looking at this would say, well, Steve, first of all, this is a really inexpensive stock, and like most inexpensive stocks, it just kind of goes sideways. So I'm not going to do anything here. I'm just going to have my money tied up. Well, sure, that may happen. That may be true. But is it really a sideways market? What's the first thing we want to do? Apply rule number 1, find out what the overall trend is. So on our platform, once again, we developed this to make it simple for you. Click on strategy 4 on the platform. In the drop-down menu, click on indicator. That's the 50-period moving average. And it automatically appears. So now, even though we were on a sideways kind of trend there, what is the overall trend? The overall trend is up. So you don't want to, you don't want to really ignore this too much because they might be giving you a signal. Now we're looking for bars that close in the top 25%, and then on top of that, meet the remaining rules of strategy 4. So we think we've spotted and identified a valid signal. Now, how do we check if we're right? I mean, you can't call me up at 3 in the morning and say, hey, Steve, can you take a look at the SIGA chart and just tell me if that was a valid signal? Okay, so what's the next best thing on the platform? Click on strategy 4 in the drop-down menu. This time, click on signal arrows, and it'll tell you if you properly identified a signal. As you can see, you were right. That is a buy signal. So everyone else is saying, I'm going to avoid this stock. There's really nothing much going on, even though it's an inexpensive $5 stock. Well, look what happened in the next week. Now, 5 points is not a lot. Maybe a lot of you are accustomed to making 20, 30 points. That's what your goal is. Well, remember, it's a numbers game, and also it's all relative, because since this was such an inexpensive stock, That was really 100% gain in just 1 week. And what if you're trading Tesla? What if you're trading Apple or Google and the stock gained 100% in just 1 week? Think you'd be happy? Well, it's all relative. Here's another example, ExxonMobil, okay? Most traders who haven't taken my courses before would look at this and say, Steve, there's no trend here. Look at this. Straight up, straight down, straight up. I mean, this is a whipsaw market. I buy, and right when I buy, it goes down. Right when I sell, it goes back up again. I'm not going to touch this thing, all right? This is the way most traders look at the markets, and this is why most traders fail. What's the first thing we do? We want to find out the overall trend. How do we do that? Apply the 50-period moving average. And we ask ourselves, where is price in relation to that 50 period? Obviously, it's above. So the overall trend is up. All right. Now we want to look for those bars that close in the top 25% and meet the remaining rules of the strategy. Well, here's one bar that closed in the top. Here's another one, and it didn't work out very well. And here are a couple of more. Okay. Well, we think we've spotted a couple. So we check our work, and guess what? These two are valid. Now, these two were not valid. They did not meet the rules and requirements of the method, but these two did. So you could have taken any one of these two signals and in a couple of weeks had a nice 14-point potential gain. That was coming into June this month. All right, let's look at this example. Remember, we talked about consistency. Consistency is an awareness of losses, right? So we're above the 50. This is a more aggressive, more advanced type of trade. I wouldn't recommend this for students that are just learning, but still, these are valid setups, and a valid sell signal was generated right here, closing the bottom 25%, just below the 50-period moving average. Now, we'd like to see more bars below, but it's still valid. Okay, let's say you took that trade. So you shorted, or maybe you bought the puts or had some type of spread strategy with a downward bias. And then look what happens. 2 days later, all of a sudden you get a buy signal. So you say to yourself, wow, I'm getting whipsawed here. I thought this method was consistent. I became a member of this course, and look at my first trade is a loser. In fact, I lost 5 points. Sure, remember, consistency means an awareness of losses. But oftentimes you're able to recoup those losses. Most traders like to sulk in the corner and say, this stuff doesn't work. I'm always play that victim attitude that, oh, why are they taking advantage of me again? I can't make money. But remember, we're only listening to the market. And the market is telling us that it changed its mind and now it wants to go up. So had you taken the next signal, you could have potentially made back that 5 points you lost and potentially made another 13 points. So this is what we mean by consistency. It's an awareness that you will have losses from time to time, but having the trust and confidence in knowing that that method will be able to recoup those losses. All right, let's look at a weekly chart of IWM. That is the ETF that represents the Russell 2000 index, okay? So it's basically a market tool telling you what the market's going to do. Now, most traders say, well, yeah, Steve, this is great, but what happens when the trend changes? For example, we're going up, everything's well and good here, we're buying, and then what happens right here when everything goes down, okay? Well, we simply change with the trend. Remember, we are never going to trade out of sync with the trend. The reason why most traders fail is because you're listening to some guy in a chat room saying, well, this is too oversold, you've got to buy it, and look what happens. It goes 2 weeks later, it's making new lower lows, okay? Or you're seeing some guy say, hey, you got to continue buying this, continue buying, and look what happens. You hold on and it gets killed. So what's the first thing we do? We apply the 50-period moving average. And so up until this point, sure, we were in an overall uptrend, but at this point right here, the trend changed. So all we do is just apply the strategies in sync with that trend. So potentially trading this, you could have made 25 points to the upside. That's not bad using the tool. And potentially to the downside, taking this setup, you could have made 48 points. So that's nearly 75 points. Now, I know in order to make that, you would have had to buy here and sell at the high, and then sell here and buy at the low. So let's say you didn't make 75 points. Let's say you only made, let's say half of that, okay? Maybe you made 35 points, 37 points. That's still not bad, right? You can't argue with 37 points. Let's say you made half of that, okay? Let's say you didn't even make that. You still made only 18, 19 points. Would you be happy with making 19 points? I think so. So we're not trying to say that everyone would have made 25 points here and everyone would have made 48, but you had that much to work with. And that's the beauty of these strategies. All right, so now we've looked at the upside. Let's look at the downside, because we've had a lot of really strong downward trendy moves as of late. And so we could have taken advantage to the downside just as well. For example, here's a chart in ROST, raw stores. Obviously, it's going lower, okay? But look what happened right here. We have a bullish engulfing pattern. If you're a student of candlesticks, that's a very bullish reversal pattern. I mean, most traders, myself included, were taught you have to buy. That's a very big buy signal. And for the next week, it actually looked pretty good. It started to go up higher. So let's say you bought off that, went long on this bar, and you're holding on. You're saying to yourself, oh, this looks really good. We're still in an uptrend. That guy in the chat room says it's going higher, so I'm going to hold on to this long position. But should you be long? Are you really in an uptrend? Because if we click on strategy 4, click on indicator, we see here that price has been below the 50 for some time now. So we don't want to try and pick bottoms or buy anything below the 50 period. Sure, it may work out well for a while, but we're out of sync with the overall trend. Remember, trading is a numbers game. Sure, every once in a while you may have a good trade here or there, but you'll have better odds for consistency if you are in sync with the overall trend as well as the short-term trend. Now, speaking of the short-term trend, what do we have here? We have a bar that closes in the bottom 25. We have another one in the bottom 25 and another one, but only one of those meets all the requirements. We think it's this one. Let's check our work. Click on strategy 4, click on signal arrows, and guess what? You're learning how to properly identify valid strategy 4 signals on your own. This is why we developed the PTS Primo Charting Platform. All right, so where most traders would be long off this candlestick pattern, you're saying, no, I'm going short, I'm selling. And 23 points you could have potentially made in 2 days. What happens if you had held on to your long position? How well do you think that would work out when you woke up the next week or so and found out that you had lost 23 points, okay? This is what we mean by being in sync with the overall and the short-term trend. And the market was telling us to get out well before this, obviously, this news announcement came out in the stock. We have no idea what it is because we don't base any of our strategies off of news. Why? Because the market tells you just about everything you need to know. Remember when we started out with that theme of today's presentation that my mentors taught me? The market tells you everything you need to know. So why would I have to look at the earnings or the news? Who cares? Here's another example. This one in ABNB. All right. If we apply the 50, we see that ultimately we switched. We were first above the 50, but then ultimately we went below. And where there were no signals generated above, we actually had one sell signal generated below. This was coming into May last month, 50 points at the very end, just about 2 weeks ago. Now, someone looking at CHTR would say, well, Steve, I'm sorry, I took that $10,000 course on institutions and they gave me that special indicator that maps what the institutions are doing. And they're telling me that there is some major institutional support here. This is where all the institutions are buying. So how can I go against the big money? These are the big banks. These are the big institutions that have all this buying power. So why would I even think of selling? Well, once again, that's basing your decision off of someone or something else. We don't teach that at Specialist Trading. We only base our decisions off of what the market is saying. And what is the market telling us right now? It's telling us the overall trend is down. Do we want to buy if the overall trend is down? Do we want to buy if price is below the 50? No. The odds are not in our favor over time of things working out for us. And on top of that, we have a cluster of sell signals right here going entirely against what the institutions are saying. So a week later, which side would you rather be on? The side of what the institutions are doing or the side of what the market is saying? There's 150 points coming into May. And let's look at Tesla right here, okay? This just happened about a month ago. A sell signal was generated in Tesla. It's below the 50-period moving average. We had one bar above, but that's not above to get us long. In fact, there was no signal generated, but there was a sell signal generated on the next bar. 250 points coming into the end of May, about 3 weeks ago. All right, so let's look at some different markets and some different time frames. Not everyone trades stocks, so let's look at Bitcoin. Here's a daily chart of Bitcoin, okay? Same rules apply, the same concepts, nothing changes because we look at a different market. We're below the 50-period moving average. Sell signal was generated coming into May, and we've all seen that Bitcoin has been going lower. Potentially could have made 15,000 points, or at least use this as a sell signal if you were long Bitcoin to get out. And you would have saved yourself $15,000, 15,000 points. How about day traders? All right, here's a 5-minute chart of advanced micro. All right, same concept apply, where here's the 50-period moving average. We're above the 50 period. We have one bar that closed, or I should say opened lower, but then closed above. And look at these cluster of buy signals. Could have taken any one of them and potentially made 7 points in 3 hours just day trading. And then lastly, we can look at a weekly chart of ZS, okay? Now, this is the same concept, even though we're looking at a different time frame. We're below the 50. We closed in the bottom 25%, and there was 100 points coming into about 3 weeks ago to the downside. So let's recap what I taught you today. I don't care what strategy you trade. I don't care what method. I don't care what time frame. I don't even care what market. You should always have a 50-period moving average applied and plotted on your chart. And then you ask yourself, where is price in relation to that 50? If the majority of the bars are above, the overall trend is up, and you only want to be a buyer. If the overall trend is below, or if the overall I should say, if the plots of the closing are below, then the overall trend is down and you want to be a seller. Now that's for the overall trend. What if you want to be in sync with the short-term trend? Well, then you use the top-bottom 25% technique, which means you want to see bars closing either in the top quarter or the bottom quarter of their range. If you have price above the 50 and bars are closing in the top 25% of their range, that is the market telling you that the overall and the short term are in sync to go higher. If price is below the 50 and you have bars closing in the bottom 25% of the range, that is the market, not me, the market telling you that the overall and the short-term trend are in sync and they want to go lower. Now, these are the first preliminary rules that make up the strategy. The first strategy I learned, that's strategy number 4. And we showed you the simplicity in being able to apply it by using the PTS Primo Charting Platform. This is the platform we developed, Pro Trader Strategies and myself, to make trading simple. Now remember, strategy 4 can be applied to virtually any market, to virtually any time frame, and to any direction. The beauty of the platform is that it gives you the access to doing that in one click. We give you the data on the platform. We give you the different markets, the different time frames. It's so simple to learn how to apply strategy 4, the very first strategy I learned. So ask yourself, we're halfway through the year. Can you believe it? In just a couple more weeks, we'll be halfway through this year. Do you think this strategy, the very first strategy I learned, can help your trading for the remainder of 2022? If your answer is yes, and I think it is, we have a great promotional offer for all of you attending today's class. We're going to give you our most consistent strategy, strategy 4, with a great discount. We're going to give you instant course access, detailed instruction. And remember, we told you that we have a type of buffet line concept to teaching where you're going to learn all the different entries, all the different exits, and all the different stop placements, our buffet of different ways in which to trade this particular method. All right. You're going to get the complete course rules. You can apply it, remember, to any market or time frame, as well as educational correspondence. And everything you saw today was displayed coming from the platform. So you really need our platform in order to have the ease of accessibility, the ease of use of learning how to apply this method. Now, on our platform, you not only have strategy number 4, you also have our enhanced buy sell line, all right? 4 different ways to tell what the overall trend is. You also have a strength of trend tool. Now, this is a tool that tells you if a particular trend is running out of steam, kind of an advanced warning if it's running out of steam or if it still has more gas in the tank. You also have a signal scanner. You can scan for signals on a nightly basis in any market or time frame, okay? You also have over 90 of the most prominent technical indicators. You have studies and techniques that you won't find on any other platform. This is because we developed it this way. Many of these things I've taken from my 40+ years of trading and things that I took from the floor that you won't find anywhere else. These are mainly trading techniques taken from the stock exchange. And this all comes with personalized tech support. Let me give an example of what I feel is probably one of the best tools on the platform, and that is the auto-generated exit levels. Remember, we give you upwards of 7 different exit levels and methods that we teach you in the course, but this is one of them that's auto-generated on the platform. For example, look at this chart here in EA, okay? Now, obviously, we have a cluster of sell signals. First two didn't work out too well, but if you'd taken the third, you would have had, hopefully, a nice potential profit here. But where do we get out? Okay, so here's what you do. On our platform, once again, all you have to do is click on Strategy 4. This time in the drop-down menu, instead of signal arrows, go down to range extension exits. And this is just one of the techniques we teach you, what they're based off of. And here you see it's auto-generated 4 specific levels for you to choose from. Remember, it's your choice. If you're the type of trader that likes to get in and out quickly, then we would suggest trade the first 2 levels. Place a limit to exit right here. If you're the type of trader that wants more profits, a better risk-reward ratio, then exit at level 3 or exit at level 4. In the end, though, we always teach our students, especially the beginning ones, to exit the entire position at level 4, because that's where most likely the trend will change. So let's say you decided to exit the nice trade right here, okay? So you're waiting, and in the next couple of weeks, guess what? It got right down to level number 4. You exited with a nice, quick 15-point gain in a couple of weeks. Not a bad little trade, right? And then look what happened. This is the beauty of this that you can only find on our platform. These are the auto-generated exit levels. Here's another example. This one in PSA. This is a weekly chart. So if you're more of a longer-term trader or a swing trader, the same process applies. Let's say you wanted to know where to get out. Once again, just click it on our platform, and 3 levels were auto-generated, all right? If you're the type of trader that wants to get in and out quickly, probably take the first level. If you're more of an intermediate trader, the second, and more of a longer-term trader, the third. So let's say you decided to get out here. Well, you had a nice 60-point gain in a couple of, I'd say about 3 or 4 months. Not a bad little trade, right? Not a bad little, swing trade, 60 points. And then look what happened. This is another reason why most traders fail. They hang on for too long to a trade, or they don't get out and they watch a positive trade turn into a loss. This is once again included on our platform. So you really need our platform in order to trade strategy number 4 properly. All right, so let's break this down. Here's the great offer we have for all of you attending today. Now, usually if you purchase separately, strategy number 4 costs $695. That includes the scanner. And if you purchase the 1 year of the PTS Primo Charting Platform, that's close to $1,200. That's $1,180, okay? So altogether, we're talking close to $1,900 to get both of these all together. Here's the great offer we have for all of you attending. We're going to slash that, okay? You're not going to pay $1,875. In fact, you're only going to pay $695. The only thing you'll pay for is strategy number 4 course, okay? You're going to save over $1,180. That's an over 60% discount. But this is for a limited time only. Think of it. Instead of paying nearly $1,900, you're only going to have to pay $695. So this is a great, great offer. Here's how to take advantage of this, okay? You owe it to yourself to take your trading to the next level. So contact Pro Trader Strategies. Pro Trader Strategies helped me develop the platform. They're in charge of all the tech support as well as all the pricing. If $695 is still too difficult as something for you to come up with, I'm sure they can be flexible and work out some type of a payment plan with you. So here's what I would suggest. Call them directly at area code 310-598-6677. They have trading consultants manning the phones. They would be more than happy to take your order over the phone or simply answer any question that you may have about pricing or about tech support or about the platform, okay? Now that link you see at the very bottom right here is the link that will take you to the info page as well as the sign up page if you'd like to sign up online. It's not a live link, but we've just posted a live link on the chat box. So all you have to do is go to the chat box, click that on, and it will automatically take you to that sign up page. But I personally would suggest giving Pro Trader Strategies a call. They're there to answer questions. Don't worry, there's no obligation. They're not going to try and sell you anything over the phone if you just want to have more information. Now, if you are convinced that you want to take advantage of this great offer, then sure, they'll take your order over the phone. They'd be happy to, but there's no obligation at all. Now, if you open up your chat box and feel free to ask me any question. I know that we have a lot of traders here that probably have questions concerning what I went over today. I know many of you probably have never seen something like this or think this is just too simple. How can it be consistent? Now's your time to ask me questions and I will answer them to the best of my ability. Someone's asking, can this be applied to currency pairs? Yes, it can. I'm sorry I didn't get one of those slides in there. There was a really great example of a number of really nice buy signals in the euro yen. I just didn't have time to get a slide of that. But if you're a currency pair trader, the euro yen has been going straight up, and there were some nice buy signals you could have taken advantage of using the same concepts and the same rules. That's the beauty of strategy number 4. Just because we shared with you most of the information with stocks, nothing changes because you're looking at currency pairs or Bitcoin or trading intraday. Now, I know the graphic we showed there said stock strategy number 4. That's because someone's asking me, why does it just say stocks? Because when we first started teaching this some years ago, my background was in stocks, and so we were mainly gearing it towards stock traders. But here's what happened. A number of these stock traders traded multiple markets once they purchased the course, and they said, Steve, I not only use this on stocks, I use it on currency pairs, I use it on E-mini futures, I use it on Bitcoin or commodities, and it works just as well. So that's why we started applying it and saying, yeah, it does. Okay, so it can be applied to any market in any time frame. So don't get confused by the graphic that said strategy number 4 for stocks or stock strategy number 4. Okay. Someone else is saying, what is educational correspondence? Educational correspondence just means that you have my personal email address. You can contact me whenever you'd like. It's the next best thing to having me sitting right next to you. I was answering emails by former students today before this class. Okay, so I answer emails as quickly as I can, and they come directly to me. They don't come to interns or to assistants. All the emails come directly to me because it is my personal email address. So you'll all get that, and you can contact me whenever you'd like once you become a student of mine. And that's not for a limited time. Someone is asking for how long. As long as I'm still trading, as long as I'm still around, you can always email me. Okay, there's no limit as to how many questions and how long you want to be emailing me with any questions. Okay, good questions. Any more while we still have you here? Yes, remember, contact pro trader strategies. Yes, the PTS stands for, the PTS Primo Chart stands for Pro Trader Strategies. So that's it. I developed a platform with them, and once again, they're in charge of all of the tech support. We have a great tech support department. They're also in charge of all of the pricing. So once again, if you're having difficulty even with $6.95, I'm sure Pro Trader Strategies is very flexible to give you some type of payment plan or something to make it easier for you, okay? So give them a call, 310-598-6677. Okay, if there are no more further questions, I just want to say as we close and take one last look at our disclaimer, I hope I taught you something today, a little bit about our philosophy, about what we really feel it takes to become a consistent trader using those 2 techniques, those 2 edges. Try them for yourself. I think you'll really see that they can improve your odds for consistency. And if you can see them by applying them to your own methods, just think how well you could do by trading with strategy number 4, okay? As we close, I want to say thank you so much for attending. Thanks for taking time out of your Wednesday. But most of all, I look forward to all of you becoming students of mine in the strategy number 4 course. Thank you so much. Have a great day and have a great trading week. Bye-bye.